and welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, brought to you each and every Friday afternoon, as always, with an eye toward preparing you and helping you be prepared for next week. And also always putting you in front of where the action is in the broader markets. Very, very interesting week. Lots to share with you. Of course, as always, we will go ahead and take a close look at where the markets are currently. Is the backdrop constructive? From there, we will go ahead and drill down further into the markets as far as uncovering where the strength is so you can capitalize on that. Also, that broadening out into newer areas. I did touch on that last week. If you did not see last Friday's show, please do, because we uncovered the sector rotation that was going on, and it did carry through into this week. So I'm going to share more insight into that as well. And then also consumers as they prepare for what I call the new normal. We're going to share and uncover some stocks there that are really perking up as people start to reemerge and examine where we may be heading. And then also earnings growth. It's still going on, earnings season this week. Some really impactful names that came out. So we are going to cover those stocks and then also share with you the broadening out effect that those earnings had in two specific areas of the market. I do like to start by sharing some of the news hot headlines for last week as a way to prepare and then also uncover why certain areas may have outperformed this week. So this is news that will continue to carry on and have an impact. Today, of course, trade war tensions were eased a bit as Trump came out earlier than expected with his comments regarding US-China. So that was constructive. Certainly, there was a little bit of trepidation there today. Jobless claims, they did come in 2.1 million, of course, historical high as it adds on to the other prior 5 weeks, but it is declining overall. That was viewed constructively. Consumer confidence did drop, as you can imagine, a lot of people unemployed. However, the savings rate economic data shows that it has grown. So that was super constructive for select areas of consumer discretionary. We'll get into that. Also, COVID-19, there was news last week with Moderna, I believe, coming out with a vaccine. There was another new company that announced this week that they are going to be starting human trials in July on their vaccine. So that's super constructive. Durable goods orders did plunge 17%, as well as the first quarter GDP numbers were revised down to -5%. So that is comparing it to 0809, where it was minus 4.8. We don't have that final number quite yet, but the bottom line is that the markets were able to look the other way, shrug this news off. It's all about looking to the future. The economies, different states are beginning to reopen. So a lot of optimism still out there in the markets, which of course is quite constructive relative to that sentiment. Let's take a look at the markets. This is the S&P 500. Those of you following my show each week, welcome back. But I did want to note that one thing that we had been on the prowl for was this S&P 500 breaking up above this blue 200-day simple moving average. That was the one of the last areas of potential upside resistance. We did break above that. Take a look at the volume characteristics. So very constructive there. We can also see that the RSI is positive and not noted here, but I can go ahead and pull it up because I do like to use the stochastics when looking at broader market indices. You're going to get a little bit earlier of a signal. Stochastics down here are positive. So the backdrop for the markets is quite constructive. So good intel going into underlying sectors within the broader markets. This is that candle glance view, and I have each of the underlying sectors as well as the S&P 500. I'm going to go ahead and add that RSI. I want to see where that relative strength is among these 11 sectors and sort it by descending. We want to see the strength up here going down into your weaker areas. So let's take a look. Consumer discretionary up here in the forefront. Relative to the markets, it did underperform. Broader markets up 3%, discretionary up 2.6, but it's still up here in the forefront. And again, last week we covered the fact that discretionary stocks turned bullish. They broke above that 200-day simple moving average. While not super powerful, we are seeing a continuation rally. So again, we are going to cover some of the stronger areas in discretionary. Savings rates high, stimulus checks are bringing out these consumers. So XLC is commercial services. And interestingly, this is another area. It was mostly flat for the week, but it is still up here in the forefront. I want to share with you also the fact that technology uh, was another relative underperformer. It was up only 1.5%, but I would argue that that masked an actual outperformance of several areas within technology. We'll get into that. This is where knowing those underlying heavyweight stocks can really be helpful because with technology, it happens to be Apple and Microsoft account for 40% of the weighting, and those stocks did not perform well. They underperformed this week. So I would argue technology is had some very interesting relative areas of strength. Healthcare was flat last week, but let's take a look. It is poised to potentially emerge out of this flat base. RSI never really got negative, and we are also poised for this MACD to have a positive black line up through the red. So I would argue that healthcare is perking up. Finally, it's been a leadership group coming out of this bear market, so good news there. And then we can see drilling down into some of these other areas. Financials were the strongest group this week. I did want to point this out, however, they were up, it was up 6.7. However, 2 days ago or yesterday, this XLF was up over 9%. So it did give back some of that strength, but we hopefully will have time to get into some of the stocks in that area. So let's go ahead and get started because I did want to share with you the industrials because that is an area that we covered last week. We can take a look at the XLI, which is the ETF. Industrials were up 6%, so another strong week. We had picked up on the rotation into industrials last week. So as you may recall, last week we did cover some of the areas that already had seen relative outperformance among industrials, and I'll share with you how we were able to uncover that. This is S&P, I mean, these sectors on StockCharts.com, and I am going to go ahead and pull up the industrial sector subgroupings. So last week, sorting it by StockCharts technical rating, and it is taking into account the chart for these sub-industry groups. As you may recall, we uncovered some of the trucking and rail stocks that had already emerged. This week, I am going to be sharing with you and talking about some of the newer areas, not those outperformers. Easiest way to get a handle on that is quite simply which areas had the highest in the way of percent change. We can see airlines up here in the forefront, but going through, there is not a stock there that I would be interested in. But however, aerospace and defense, very interestingly, because it does also have that lower rating, we can take a quick look here at the chart, and I'm finding this compelling because we can see it's broken up above these shorter term 10-day simple moving average is the green line. The red is your 50-day. So we've had a nice break up also this week above these areas of potential resistance is carry that sentence on. But also this week we did get that green 10-day up through the red 50-day. That is a golden cross, a secondary indicator, but certainly bullish. SI is positive with that MACD this week just trending up above that net neutral zero. And I would argue that some of these defense stocks could have moves up to this other secondary, this next area of potential resistance, the 200-day simple moving average. So that's a very significant potential advance. So with that, let's take a look at some of the underlying stocks that I have found to be very interesting. The first name that we will start with is Lockheed Martin. And this, the company did come out. Take a look at this big. They had a big 5.5% move earlier this week, all about management coming out and talking about the CEO actually said that they expect by year end to be fully operational. They did have a lot in the way of supply chain uh, difficulties that they are taking on head on. So they are anticipating, again, full functionality. So that really helped lead the charge for other stocks among aerospace and defense. So I'm going to share with you a couple of stocks here that we can take a look at. Now, from my work, I'm going to be interested in those stocks that have already broken back above these potential areas of resistance. This is a smaller cap stock. It's a little sloppy in the way it trades, but from my work, the stock is poised to break out of this lengthy 4-month base. The company is AeroVibrant, and AVAV is the ticker symbol. And this particular company is involved in robotics and in particular drones. So they've seen a lot in the way of growth within the company. The stock is finding support at this upward trending 10-day simple moving average. Let's take a look at a stock within defense related area that reported earnings earlier this month. This is uh, Kratos, KTOS is the ticker symbol. And on May 17th, they did come out with earnings that were above estimates. This is that gap up on the release of their earnings report. Estimates for next year, 109% earnings growth. So very healthy going forward. Caught my eye because the stock this week broke back above that 200-day simple moving average. And in essence, when you are reversing a downtrend, similar to KTOS, once we do break up that above that last potential area of upside resistance, the stock is freer to advance. And this is with an eye toward a base breakout here at 21. And then another phenomenon that occurs is your longer term simple moving averages, such as the 50-day, are now trending upward. This 10-day poised to cross up above the 200, a golden cross. So interesting dynamics taking place there. This particular company does do a lot of work with satellites. MRCY is another one, a little bit of a smaller name. These smaller companies are faring a bit better. MRCY is Mercury, and we can take a look because the stock did have a very nice advance earlier in May. Again, earnings related. The stock pulled back, but now it is poised to again form the right side of a base, looking for a base breakout here at about 96. Estimates are very good. This particular company provides sensors for the aerospace defense area. And estimates are very positive and being revised higher for the company. And then they also are in technology because they do provide parts for PCs. Big demand with this stay-at-home economy. PC demand has been high. So overall, nice growth characteristics. We can see the MACD black line poised to trade up back through that red, indicating that this downtrend may very well be reversing with a positive RSI. So that was one area among the industrials. I did want to share another area and also share with you how you can get in front of the move into industrials and potentially newer areas to that space. So back here we are going into the sub industry groups. And again, I'm going to sort it by, it's already sorted by percent change. And let's take a look because I did go through heavy construction, nothing in there of interest. You can see it has a low scooter rating, but some of these last week group for these truckers sky high, all about a reemerging economy, a need to transport goods. They already were performing well because of the need to get staples and needed goods out to a lockdown community. Now it's all about optimism surrounding the economy. We talked about truckers last week. This week, let's take a look at those companies that provide uh, parts to these truckers, and that's going to take us into the sub-industry grouping here, trucking parts. We can sort it by this scooter rating to go ahead and get in front of some of these more interesting names. I've gone ahead and screened, so I am going to share with you some of the better, certainly more interesting at this juncture, stocks. This is PACCAR, PCAR, in that trucking equipment space. Take a look. I think you'll know what got my eye here is the fact that it did very decisively on volume break back above this 200-day simple moving average. They did come out with earnings, 53% year-over-year earnings growth. Actually, that's the estimate for next year, but they are on track. They did come out with a good quarter recently, and the stock is poised to break out of, again, a very 4-month base breakout. RSI, MACD are constructive. Another one within the trucking parts community is a little bit better known. CMI is Cummings, and this particular stock on this breakout this week has gone on to new heights. So we had a base breakout on volume. It is pulling back a little, but the stock does still look constructive. Cummings has a 3.1% yield, but they also do have very strong growth prospects going into next year. 38% growth is anticipated, but currently on this daily, we can see the RSI and the MACD both in constructive positions. One last one, this is a smaller name in the space, SPAR is the ticker symbol. It's $600 million but we can company, but we can see that it is reversing this downtrend. They did come out with earnings. They beat both on revenues and on earnings. And then another one where expected growth next year is 28%. So a nice grower continuing to find support at this upward trending 10-day simple moving average. We're going to take a brief break here, and I'm going to, when we get back, share with you some of these stocks that are preparing for the new normal. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. I'm starting with this first company. It is in consumer discretionary recreational products, just to set the pace. The company is SCP Pool Corp, POOL. It is certainly extended by any standard, but I'm just highlighting this theme as we go into the summer months. Anticipation, and in fact, the company has seen a great increase in individuals, consumers looking to have their own private pools as summertime, as potential quarantining is still going to take place, people are not inclined to, apparently, according to polls, get on an airplane, travel over to Europe and elsewhere. There's going to be a lot of people staying put. So this is one. There's another stock that I did highlight before, also going into the summer months, is Malibu Boats. And this company has seen a big pickup in demand for their boating, certainly their boats. We can see the stock is finding support at this upward trending 10-day simple moving average, another theme where people can enjoy with their family, those close to them, but be out in the open and not concerned with crowded spaces. Let's take a look at another stock that already has had an extensive move, but I do want to share it with you. This is Camping World, CWH, another activity, outdoor, family, where you can be among those that you know that have quarantined, that you feel safe with. Very confirmed uptrend. However, the stock is overbought. I'm pointing this stock out because there is a supplier of camping products that is seeing a pickup in sales. YETI. We can see the stock gapped up here and after earlier advancing above that 200-day simple moving average, that bullish golden cross. Stock's pulling back just a little, and it does look constructive because you're getting nice volume characteristics on this breakout above resistance. Another area that we can take a look at is the resumption of sporting events. And for those of you that follow the news closely, you may have seen photos because it was really very striking. There was a NASCAR race last weekend that people were elbow to elbow with no mask. So there is a sense that sporting events are going to be coming back into play. This particular stock is DraftKings DKNG, another one that's already out of the gate, if you will, but they are the only company that has an integrated, they're a pure play on sports betting. So this concept of sports coming back and individuals still being at home, there is anticipation for a pickup in sports betting online. This particular next stock is Penn National Gaming. A little bit earlier in its advance, it also provides the platform for online betting, but it's not their primary source of revenue. They do also have casinos, but you can see that the stock is in an uptrend this week, consolidating after a fairly significant advance. So certainly one as far as returning to this new normal that people are anticipating. Nike is another one, a little bit different as far as what they are all about, but it is about outdoors activity. We can see Nike in this nice uptrend, poised to break out of this multi-month base here at 102. Nike opened all of their Canadian stores, I'm sorry, their China stores, and also opened their stores in select areas in the US. And apparently in Atlanta, I believe again last weekend, people were waiting 2 hours to get into their reopened store there. So that's another bullish play. One last name we can look at, they did announce they're going to be opening their parks in July. I would argue not quite ready for prime time. And this, of course, is Disney. They did open in Shanghai earlier this month, but only allowing 1/3 as far as capacity of those that could enter the park. So we can see here the stock did gap up on news here, and it is pulling back following to that, finding support at this upward trending green 10-day simple moving average. However, we are approaching resistance here at 127. That's that blue 200-day simple moving average. So those were some of the names I wanted to share with you because it certainly is thematic. We're also seeing RV pickup in sales there as people head into the summer months and anticipating a new normal. I did want to talk about stocks that reported earnings. There were a fair number, surprisingly, and with that, there certainly were themes that emerged, and among those was something that we've talked about here in the past that can be, in fact, really quite powerful, and that is the gap up subsequent to earnings. This first company here is Dell Technologies, DELL. We're looking at a daily price chart. Take a look at that volume. The stock gapped up 9% on earnings. Again, stay at home, big demand for PCs. Stock has now broken back up above this 200-day simple moving average. In essence, we can see going back historically how that has acted as resistance repeatedly. So this breakup on volume, very constructive. I'm going to share with you names that already have reported with gaps up over the last few weeks so you can get a sense on how to handle these types of gaps up. Z Scalar is another stock that reported today. This one was up 29%. Again, gap up, all about stay-at-home security software, huge unprecedented volume. So this is very, very relevant. I'll share with you another stock that did report that's in this same space that was up 21%. Actually, I'll do it right now. FTNT. This is also software security stock that we followed in the past. This gap up here was up 21% on earnings. When you see these stocks gap up on earnings, break out of bases, huge volume, very constructive. So with this particular stock, we can see that it did on that 1 day 21%. So that's something to bear in mind. Does not mean that you missed the stock. It is going to continue to advance. I added that 21-day simple moving average. For those of you with my MEM Edge report, you'll know that a lot of our big winning stocks pulled right back to key support and are bouncing. We've had a tremendous latter part of the week with those suggested holdings stocks on the MEM Edge report. As they pulled back, these leadership names are now re-emerging. Let's take a look at another stock that reported this week, all about stay at home. This is Workday, WDAY. Not really a leadership name, certainly from my work, but it did get that gap up, huge volume. So very, very constructive. This stock is one from the MEM Edge list, my suggested holdings list, and it did come out with very strong earnings. The stock is now poised to break out of this longer term base, very, very bullish. And the other phenom that I did want to point out, when you are watching these stocks as they approach their earnings due date, keep an eye out on upgrades versus downgrades. ADSK was upgraded going into earnings. Another company that did report this week is Dollar General, and they were upgraded going into their release today of earnings. Take a look at this volume. Gorgeous, broke out of this nice base. There are any number of other, we're seeing a phenom as far as these discounters really taking off because this unemployment rate, there is anticipation that we are going to continue to see shopping in this discounting area. These guys reported last week, BJS. We can see this big move, and it's forming a nice high tight flag formation after the release of their earnings. Let's take a look at another company that also reported today, Ollie. Now, these guys already had been in an uptrend. This is Ollie's Bargain Outlet Holdings. They are back on track with reopening new stores, but they did come out with very strong earnings, but you'll see they were pretty much priced for perfection. So we didn't get that kind of gap up in response, but a very, very strong earnings report nonetheless. DLTR is another one, just to kind of round out this theme. Gapped up, huge volume on earnings, 11% year over year earnings growth. That doesn't sound great, but it was 50% above estimates. And at the same time, they were coming from a period of negative earnings. So a nice turnaround, potential reversal, downtrend reversal on this stock. I'm going to leave it at that. For those of you that haven't already, please go ahead and use the link below to trial my MEM Edge report at a nominal fee. Get you in front of these fast moving stocks that are poised to trade even higher. Have a great weekend, everyone. See you next week.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, Give us a like down below, leave us a comment, we'd love to hear from you, and most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.